I don't bucket silver as much in precious metals anymore. It's almost 55% industrial. And every day that goes by is more industrial. Central banks are not buying silver, they're buying gold. And I fully expect gold to remain one of the best performing assets. So far this year, it's been beating almost all commodities.
Of
It's up
course.
10% on a 1 year basis. Commodities are down 13% or 14% on a 1 year basis. So my base case is gold is going to be still remain one of the best performing assets in the next 12 months, who knows, number of years.
Hmm.
The problem I have with silver is it's much more like copper. It's tilting more like copper, an industrial metal. So I'm quite bullish gold, and I'm indifferent. I'm actually more very concerned about silver following risk assets like copper in the stock market.
According to Mike McGlone, macro strategist at Bloomberg Intelligence, silver is no longer primarily categorized as a precious metal, but is increasingly viewed as an industrial commodity. This shift in perception is crucial because it implies that silver's price and demand dynamics are now more closely tied to industrial and economic factors rather than traditional safe haven characteristics. Approximately 60% of today's silver is estimated to be used for industrial purposes such as electronics, solar cells, automotive, and soldering, with the remaining 40% available for investment. Silver's value is primarily driven by demand from the industrial sectors, which the Silver Institute projects to reach an all-time high this year at 576.4 million ounces, a 4% rise over 2022 after a 5% increase the year before. McGlone points out that central banks are not showing substantial interest in acquiring silver. Instead, they are more inclined to buy gold. The World Gold Council's latest Gold Demand Trends report shows that gold benefited from record central bank buying in the year's first half. Central bank buying in H1 reached 387 tons. This divergence between central banks' preferences for gold over silver suggests a growing variation in their perceived values and roles within the global monetary system. According to McGlone, the silver issue is that it behaves more like copper, another industrial metal. If the global economy continues to contract, as is happening in China, Europe, and the US, copper tends to suffer, and he believes silver is at risk of following copper's downward trend rather than rising with gold. He anticipates that gold could continue outperforming most other commodities. We will now bring you clips from Mike McGlone's interview with Wall Street Silver. But before we do, if you want more videos like this, hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
The problem I have with silver is it's much more like copper. It's tilting more like copper, an industrial metal. And if we get this tilt towards global economic contraction, which it's happening in China, it's happening in Europe, it's happening in the US, just about time, that copper almost always suffers. And I think silver is going to be at risk of following copper lower and less inclined to go upwards with gold. What typically will take for silver to break out higher is expanding economic growth, which is not happening. It's going the other way. And Federal Reserve easing. Concern about silver, my bias still is, my base case remains for gold to continue to outperform copper. It's been doing that for many years, and it looks like it's ready to break out. For gold to continue outperforming most broad commodities. I'll be publishing, by the time we hit the tape on this, I'll have published my outlook, and that's kind of my title. It's been my theme for this whole month. And then that's the problem with silver. Silver around $24 an ounce has been stuck there for a while. And here's the bottom line with gold. The average price for gold this year is $1,933. That year, 1933, harkens back to when I love using this analogy. It's the average price here harkens back to when President Franklin Roosevelt, took U.S. off the gold. We basically debased the dollar versus gold. That ended deflation. That bottomed the stock market in dollar terms. So I'm quite bullish gold, and I'm indifferent. I'm actually very concerned about silver following risk assets like copper in the stock market. I have to see like I said, I think gold has a higher probability of rallying in my base case for a severe economic recession. But the key thing about the Fed to ease is the last two bottoms in the stock market, of which copper is very highly correlated. If you look at copper, overlay with the S&P 500 and divide by 1,000, it's like the same price since 2015. The last two bottoms in the stock market came almost 2 years after the first Federal Reserve ease. So let's put copper in that bucket with the stock market, and put copper in the bucket with China. China, to me, is at that point where it's something some of us have been looking for decades, where it's tilting towards a severe reset of this parabolic growth. So you can't get bullish copper without that. Silver obviously has the PV, the photovoltaic demand, but solar demand, but it's not
Yeah.
even 15% of total. So gold first, more likely. Silver, I don't know, but I'm worried that here's my bottom line. Copper right around $3.80 a pound. I think is more likely to go to 3,
Hmm.
which means it should pressure silver closer to 20.
As the current economic situation continues to cause concern, McGlone highlights the Federal Reserve's decisions to raise interest rates in upcoming meetings despite economic challenges, which he sees as part of a broader financial reset that is just beginning. The Fed has raised rates by 5.25 percentage points since March 2022, and inflation by the Fed's preferred gauge has decreased to 3.3% from its peak of 7% last summer. McGlone points out a significant amount of government debt, currently at $33 trillion, with projected annual deficits of $2 trillion for the next decade. This trajectory is concerning, especially considering the fiscal stimulus programs, support for wars, and aid to countries like Ukraine, all contributing to the growing debt burden. This situation could lead to a significant economic contraction or reset, where the economy contracts and enters a recession. However, he believes that the Federal Reserve will not be able to stimulate the economy as effectively as before when the stock market starts to decline due to the fear of inflation. Let's get back to the interview.
I mean, it's very alarming. And let's just look at it from a factual standpoint. The fact that the Federal Reserve is still hiking rates and still expected to hike rates at the next few meetings, September and November,
Hmm.
despite things like that, is part of what I view as part of this great economic reset just getting started. Now, I've been early. I've been wrong on that call, but sometimes it's persistence that matters, and everything like that you mentioned are just those little things
Right.
that I think are all tilting that way towards we should expect a reciprocal economic response in terms of what happened with the biggest pump in liquidity. That's a problem with the trajectory is we're getting this spike in debt
Right.
despite this pretty significant economic expansion. And a lot of that is because of the programs of Biden economics, the war, supporting the war in and helping the Ukrainians and people in Ukraine. Um, and what you point out is a body in motion I'm very concerned about. Now, because of those notable mentions, we've spiked up in interest rates lately. We've kept the Fed, and because of this massive fiscal stimulus, which is increasing the debt, it's kept the Fed hiking rates and vigilant against inflation. It's kept inflation strong. You see the lose-lose there?
Yeah.
And that to me is part of, it still fits into my great economic contraction reset is what I think will happen. My base case is we will get this normal trajectory where the economy contracts, we get a recession. Um, but what's happened is the Fed will not be able to ease with the ease they ever have in the past when the stock market starts going down because
Right.
of the lessons of it'll resonate back to the Weimar Republic in Germany, where the Germans were so hesitant to pump liquidity in the system because of all that inflation. But we have that now, and it just hasn't been tested yet. So I fully expect treasuries and bond yields will drop a lot. A
Hmm.
good example of that is Japan. We're all becoming Japanification. Um, but yeah, those are trajectories. The key thing that I think I need to point out about what you pointed out there is, yes, those are a problem. But what
Right.
just happened recently with Fitch downgrading U.S. debt is a tilt in the wrong way, but it also shows the strength of our system.
Right.
And that is, Fitch is a U.S. company. And Fitch is pointing out things that we need to know. We do not have people like me or entities like that in China or Russia to tell the leaders what's going wrong and what they should do about it.
Mm.
So that's one key thing to remember about it. But the trajectory that you pointed out is quite negative. And it's what unique thing about it is a lot of that's because all that fiscal spending is keeping the Fed to tighten more, which is part of the train wreck or lose-lose I keep think is coming for risk assets. And the number one thing that's holding us up still is the U.S. stock market remaining resilient.
Yeah.
And I think at some point that's going to roll over and then everything falls. And so we can move on from that one, I guess.
The industrial demand for silver is likely to remain high for the remainder of this year, primarily due to the expansion of the global photovoltaic cell market as well as the electric vehicle market. What are your thoughts on the changing perception of silver and its role in the global economy? Please share your thoughts in the comment section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.